T, good to see you. How you doing? How you been? Pablo, good to see you. How you doing? How you been? Evening, Miles. How's things? Artistic, good to see you. How you doing? How's things? Just gonna pin the live quick. Pin to your profile. Pin. And that should work. Yeah. Welcome to the CMF Live. If you're watching this for the first time ever, the CMF essentially stands for Crypto Miles Family. My name is Miles. You can tune to this live Monday, Friday, 10 p.m. London time onwards for the most recent news regarding cryptocurrencies, CBDCs, AI politics, and regulations. Pretty much all the information you should know about regarding the world completely transforming into a digital space. The disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. And this is episode 428 of the CMF Live you're watching right now. Thank you so much to everybody who has essentially liked and retweeted this live if you're watching this on X, CMF members. And thanks so much to everyone who's also actually watching on YouTube, who's also liked the live as well. And a special thank you to everybody who's put a comment outside the live as well. Now, on tonight's live, we're going to be talking about Bank of America. We're going to be talking about Morgan Stanley's new footsteps inside the crypto space. We're also going to go through news on tonight's live regarding some crypto options that are expiring. We're going to be talking about essentially the Fed in terms of where they think the market space is going to be going, especially that Jerome Powell is going to be leaving in May. We're also going to go through essentially on tonight's live regarding some international news in terms of the European market space or the Asian market space of what's happening in terms of crypto space. And obviously, we're going to be talking about Ripple on tonight's live as well. Some Latin American news to go through as well. Now, those are the news topics we're going to cover on tonight's live. We're also, the first news we are going to be talking about is Bank of America. But before we go through Bank of America news, let's start the conversation first. Let's see what's happening there. And we'll go straight into the first news. By the time everyone should be tuned in. So let's see where we're at. Artistic, good to see you. How you doing? Mike, good to see you, brother. How you doing? Manny, evening miles of CMF. Good to see you. How you doing, Manny? Wow, I'm first for the first time ever. T, you are definitely first in the live show. Hi, Miles of CMF. Stormy, good to see you as well. How you doing? Mike, let's go. Good morning from Vang Tao, Vietnam. Okay. What up, Miles and CMF? Hope all is well. Let's go. Let's go. Ray, how you doing, brother from Vietnam? Good evening, Miles and family. Good to see you as well. Ian, how you doing? Now, first news on tonight's live is regarding Bank of America. Now, Coinbase was seen essentially a downgraded stock, essentially their coin. However, Bank of America today has upgraded essentially Coinbase's stock to essentially a buy option instead of a sell option, which is a positive outlook towards the crypto space in general. You know, being Coinbase essentially the second largest cryptocurrency exchange out there. Bank of America upgrades essentially Coinbase to buy as exchanges move beyond crypto. Coinbase, essentially Bank of America has upgraded Coinbase coin to a buy rating, pointing to the exchange's growing essentially ambitious beyond crypto trading and its increasingly diversified business model. In a research note essentially published today, Bank of America analyst Craig highlighted Coinbase's pivot essentially towards becoming an everything exchange essentially going forward, a single essentially app where users could essentially one day trade stocks, buy crypto, make peer-to-peer payments, and even essentially wager on prediction markets. The company details some of these plans at essentially a product showcase in December, where it announced upcoming essentially features including 24 essentially 5-stock and ETF trading for S&P 500 names, equities, and Petroco essentially launching internationally in 2026, and a new tab for prediction markets through essentially his partnership with Kaspersky, a CTFC essentially regulated exchange. Also earlier today, Coinbase essentially announced that futures on copper and platinum will also go live on the platform on January 26. Coinbase is making some big moves inside the crypto space, trying to, as much as they can, intertwine the blockchain sector with the traditional financial sector. These essentially expansions are designed to deepen user engagement and diversify essentially Coinbase's revenue beyond its core crypto trading business, which remains essentially heavily tied to price swings in assets like essentially Bitcoin. Coinbase is also essentially betting big on Base, its Ethereum layer 2 network. While it was essentially initially launched without a token, management is now weighing in a native token to help decentralize the platform and incentivize essentially the usage. Bank of America estimates that the move could raise billions in cash for essentially Coinbase, while also bolstering essentially Coinbase's push into decentralized finance. Coinbase launching their own crypto token, essentially coin on the Base network, is going to be a big, massive play for Coinbase. And I do see essentially as a token that could climb the ranks heavily, the same way essentially BNB essentially climbed the ranks heavily for essentially Binance Exchange. Another major essentially initiative is Coinbase's Tokenize, a platform designed to bring real-world assets like private equity and real estate onto the blockchain. This aims to serve as asset managers looking to tap into younger or essentially on-chain investors while taking advantage of faster settlements and lower fees. Despite a 40% pullback on coin stock price since its July high and raising essentially short interest, Bank of America maintains a $340 price target, implying nearly 40% upside for coin essentially shares. So if anybody is holding Coinbase's stock, Bank of America is suggesting essentially 40% upside is on the way. The firm also argues that Coinbase is still essentially in early stages of monetizing its broader platform and remains well positioned as the most regulated and trusted crypto native essentially company in the US. Coinbase's near-term essentially financials remain vulnerable to price essentially volatility, but Bank of America sees the long-term picture, a company transforming from essentially a trading platform into a full-stack financial hub. It's extremely bullish essentially that Bank of America has put Coinbase on the list of essentially buy instead of sell, which was originally what it was on. And also Coinbase becoming and everything up, it's also a brilliant idea because the more crypto is intertwined into traditional financial market spaces, the better it is for us. And the faster essentially exchanges do this, the better it is for us again. Now, moving on essentially from Coinbase going from sell to buy to this. $2.2 billion worth of crypto options are set to expire. This could play out bad or good. So, crypto option contracts that are worth an eye-whopping essentially $2.22 billion are set to settle on trading platform essentially Durbit tomorrow. Such a notable essentially expiry could potentially trigger substantial volatility inside the crypto markets tomorrow. It is worth essentially noting that Durbit controls approximately 85% and 90% of the global crypto options market space. The flagship cryptocurrency accounts for essentially a vast majority of the actions, $1.84 billion. The data shows essentially that there will be an intense standoff between bulls and bears when these options essentially do expire. That's why I say it could be good and bad. The Pole essentially call ratio, which measures the volume of bearish versus bullish bets, currently stands at 1.05. A ratio above 1.0 means that there are some essentially bears, then there are some more bears than there are bulls. The market is currently titled essentially slightly towards fear or hedging with a 1.005 and puts it for every call. It is likely essentially to Bitcoin's recent failure to reach or make it or break it essentially around $95,000. At the same time, the max pain point essentially is at $90,000. This is the price at which the greatest number of options, both essentially puts and calls, expire essentially worthless. It is the best case scenario for the house. Durbit essentially notes that the open interest brackets the current price. There is a wall essentially of puts protecting against a drop below $85,000 and a wall of calls essentially betting on a breakout above $90,000. Ethereum has a ratio below essentially 1, meaning there is more volume in calls than puts, which essentially is not the case for Bitcoin. Traders are aggressively betting on the upside rather than buying downside protection. As reported essentially today, Bitcoin did fail to sustain its position above the psychological level of $90,000, essentially for the third time since November 2025. The cryptocurrency recently confirmed that the New Year's rally to 94,500 was a bull trap. The chart essentially remains trapped in a sideways range defined by resistance at $92,000 and a support at $85,000. But the massive option expiry could bring some fireworks. So, the options that are going to be expiring, $2.22 billion, it could play out good, it could play out bad. It just depends on essentially where the bulls or the bears are standing on. So far, it seems like there are more bears than there are bulls. However, I don't think it's a smart idea to push the markets down unless essentially they're doing it for a purpose. Something that we talked about yesterday where the world elites essentially, 65% of them fired their bank managers because they didn't let them enter the crypto space soon enough. And then now, the options are coming to essentially sell-off position. Market goes a little bit downward, at least jump in because they did feel the pressure of not getting in much more earlier and regretting it. Essentially, 65% is a high number, but it was only in the UAE. It's still a high percentage in terms of that. So are they going to be pushing the market down essentially on these buy options because the world elites want to buy in just a little bit cheaper, not too drastically cheaper, just a little bit cheaper? Or are they essentially the bulls are going to be fighting back and we won't see any sort of lulls, instead we'll see fireworks? It could play out both ways at this point, so we just have to see what happens. Or it could just be stagnation, which is going sideways instead. Now, but if it goes essentially up, down, or sideways, you know why now. Now, moving on essentially from that to the Fed. But before we talk about the Fed, let's go inside the comment section first, and then we go straight into the next news. As I said previously, this is live, which means if you do have any questions, put it inside the comment section. More than happy to help you out. So let's see where we're at inside the comment section. We're here. Good evening, Miles. How are you doing? I'm doing great, Callie. Good to see you. How are you doing? Hello, Miles and CMF. Mickey, good to see you as well. How you doing? Good evening, Miles and CMF. Funky brother, good to see you as well. How you doing? Miles, is it true Zcash went down under today? Zcash developers essentially left Zcash a long time ago, to be fairly honest. It's just another project similar to Monero. The reason why privacy tokens are picking up right now is because the fear of going into a digital centralized world is pushing people towards privacy tokens, essentially, to get out of the system. But the idea that you can actually full on use privacy tokens to get out of the system is ludicrous up to a certain extent. As I said previously, decentralization will exist with elements of centralization, even though when it comes to projects like Monero, essentially, or Zcash, or any of the privacy tokens out there. And it has been shown in the past where Monero, essentially one massive pool of Monero was completely controlled. Even before that, it all, suggesting it's the fully privacy token everybody should be going towards. And then it came out that essentially one massive pool was controlled by one essentially majority group, therefore, destroying the whole ideology of the complete decentralization and privacy. So this is why I said for the longest time, honestly, we're going into a digital world. It's not going to be fully decentralized, no matter how you look at it. There's always going to be elements of centralization in it. Now, let's see where else we're at. So regarding Zcash went down today, yes, and also the developers of Zcash left a long time ago as well. But they did come back apparently to release some sort of a wallet today. More than Miles of CMF. Shelly, good to see you as well. How you doing? How you been? Miles' question, do you think that if the Republicans in America lose the midterm elections, it will have a negative effect on crypto? Hell yes. If the Republicans essentially lose momentum in the midterm elections, it's not going to be a pretty day or a good year for crypto in any sort of a way. Democrats honestly should be nowhere near crypto regulations. In my opinion, they should be nowhere near any sort of regulations because they make horrible choices. But yes, it wouldn't end well whatsoever for crypto. I mean, just picture Biden's era again. And nobody liked Joe Biden's era when it came to the crypto space. I mean, there was Gary Gensler, suings left, right, and center. Nothing was passing through. It was just absolutely horrendous to be inside the crypto space at that moment in time. But we did get through it, and because we were rewarded with Trump and with the Genius Act and the Clarity Act and the cases getting dropped and every other department becoming pro-crypto. But yes, if we lose the midterm elections, it's not going to be a good year for crypto. So if you are an American, please vote Republican. I don't care who you vote for. Just vote for Republican. And again, none of this is financial advice or political advice whatsoever. It's just, if you care about your crypto, then Republican is all the way. If you don't care about crypto, then vote Democrat. But if you care about your crypto wallets, if you care about your generational wealth, if you care about your crypto future, vote Republican in every direction. You think we're going to have a red weekend coming then, Miles? We have to see how the options will play out. So far, a little bit more bears than there are essentially bulls. But a little bit down to cause essentially a firework to go up. Hi, Miles. When the markets get high price, Johnny, good to see how you're doing. Considerable change. Now, the Fed essentially came out today and suggested that we're going to be going towards inflation a lot more faster. So here is what the Fed had to say. Americans expect faster inflation over the next year. The New York Fed survey shows. Americans expect prices to climb faster in the coming year, while their confidence in finding work has essentially sunk to the lowest point on record. New data from the Federal Reserve Bank of New York showed essentially today. People surveyed now think prices will go up 3.4% over the next 12 months, a jump from 3.2%. They predicted essentially in November. At the same time, workers said they essentially have just 43.1% chance of landing a job if they essentially lost their current one. That's essentially the bleakest outlook since New York's Fed started tracking this figure essentially in mid-2013. The findings essentially paint a picture of an American public essentially caught between two worries, raising costs and shrinking essentially job prospects. This split mirrors essentially tensions inside essentially the Federal Reserve itself, where some essentially policymakers remain focused on tamping essentially down inflation, while others essentially worry more about people losing their jobs. The disagreement makes it unlikely that the central bank will change interest rates when officials meet later this month. In other words, we are not going to be expecting any sort of rate cuts from the Fed. So it seems like Jerome Powell is going to be, doing the exact same thing Gary Gensler did until the very last minute, take the absolute PISS, and then leave. The survey results essentially arrived just ahead of key economic reports. The Bureau of Labor Statistics essentially plans to release monthly essentially employment numbers on Friday, followed by essentially consumer price data on January 13th. Researchers polled households from December 1st through essentially December 31st, 2025. Beyond the headline numbers, the survey revealed essentially Americans are getting more nervous about falling behind on their bills. People out their chance essentially of missing a minimum debt payment in the next 3 months at essentially 15.3%, the worst reading since April 2020, when the pandemic first essentially hit. Yet there was a brighter spot. More people than any time since February 2025 said that they expect their money situation to get better over the next year. I just want to explain one major thing, which is just think about where this information is coming from and what's about to happen next. The Fed, who is pretty much standing on its last leg because of Jerome Powell, essentially exiting in May and being called an absolute useless by Donald Trump and pretty much everybody else on the Republican side for not doing rate cuts earlier enough. The Fed, Jerome Powell, is about to exit. And the Fed is saying that we have a survey from November. They're coming out with it today, by the way, but they're saying we have a survey from November to now that essentially this year is going to be horrible. Prices are going to go through the roof. Inflation is going to go through the roof, and so on and so on. And trying to give everybody this, as they called it, essentially the bleakest, essentially year to come. Just think about it for a second. Why is the Fed coming out with this type of information now? Is it because Jerome Powell is leaving essentially and he's going to be replaced by essentially a pro-crypto Republican by Donald Trump, and he's trying to make the person that comes after him next horrible already? He's trying to give an image that when he leaves, everything is going to go to the worst side because of Donald Trump and essentially whoever's going to be chosen to replace me, is technically what it looks like. When asked about specific goods and services, people predicted smaller increases for most essentially categories. They expect gas prices to climb 4%. How do you expect gas prices to climb essentially even higher with America now controlling Venezuela's gas? How does that one add up? Food costs are seen rising 5.7%, while medical care expenses could jump 9.9%. How is medical care going to be jumping 9.9% or even higher, let's just say, essentially throughout the whole year, when Trump made that massive deal essentially for medication prices to come down inside the United States? On the other work front, people expect their pay to grow 2.5% over the next year. At least it's something positive regarding the whole year. A small dip that leaves earnings growth below its average for the past 12 months, and then it ruins it. The average person essentially surveyed put the odds of higher unemployment a year from now at 41.8%. Through the figure actually dropped a bit from November. I'll give you an example, another example. When Gary Gensler was leaving the SEC because of Trump, Gary Gensler's last speeches on CNBC Squawk was, in other words, I stand by what I did, suing these crypto companies, bringing these crypto companies into the United States. It's just going to ruin the American people's lives. Crypto is going to ruin them. It's going to take their money from them. It's not a regulated market space. It's this and that. And he absolutely bashed crypto before Gary Gensler. Before Gary Gensler left, he absolutely bashed crypto and said it's a horrible idea for me to essentially be leaving. In other words, and getting replaced by a pro-crypto, becoming a pro-crypto America. Now, the reality, when Gary Gensler left, all the crypto cases dropped. Bitcoin reached new heights. We actually got crypto regulations passed, and we have crypto companies essentially getting bank charter licensing. So did it really end bad when Gary Gensler left? No. Is it going to end bad when essentially Jerome Powell leaves essentially from the Fed? No. It's actually going to be a lot more better for us. But they sure as hell can paint a picture of negativity before they leave the door. On household finances, people essentially think their income will grow 3.0% over the next year, while they expect to spend 4.9% more getting credit as it's essentially becoming harder, according to a survey responses, and people think it will stay difficult. The probability of missing debt payments jumped most essentially for those over 60. People with just high school diplomas and household earnings under $50,000 annually, people expect government debt to balloon 9% over the next year, well above the typical projection of 6.5% over the past 12 months. They're less optimistic about savings accounts and interest rates, putting just 23.4% chance on rates, better essentially in the year, higher in the year. Stock market sentiment edged up slightly, with people seeing a 38% probability that share prices essentially will be high in the next 12 months from now. At least that's something positive on his way out. But honestly, this is just Jerome Powell essentially using the Fed to put the fear inside of people that when he leaves, everything's going to go sideways. In fact, when he leaves, everything's going to get a lot more better. Things might get a little bit shaky when he leaves because all the essentially liberals from all the Western nations will be coming out, and I can picture it already now. Jerome Powell is going to leave, and the Europe is going to be coming out. The first one, probably Europe, or I would say the Washington Post is going to be coming out, or even essentially Wall Street Journal is going to be coming out and suggesting that Trump is about to choose someone he knows, and it's just going to be Trump's essentially person, and he's going to be doing political moves. He's putting the Fed at risk, and so on. The EU is going to be jumping on the bandwagon, again promoting a EU essentially stablecoin or an EU essentially token to take over the US dollars. I can already picture it now. So we might have some sort of shaky grounds when essentially Jerome Powell leaves, but in the long run, everybody's a lot more better off. We had a little bit of a shaky ground when essentially Gary Gensler left from the SEC. There was a little bit of time period, not much happened, and then suddenly crypto cases were getting dropped left, right, and center. Same play out is going to be working. Same thing is going to be happening. When the Fed, essentially, when Jerome Powell leaves the Fed, we're going to be on shaky grounds. The EU is going to jump on the bandwagon of whatever the essentially Wall Street Journal says against Trump, or whatever CNBC says against Trump, or whatever essentially Huffington Post says against Trump. These are all the liberal, essentially what Trump calls fake news. Those are the ones that are going to be coming out against them. A little bit of shaky grounds will start, and then suddenly, new Fed member, pro-crypto person, things get rolling. You know, there's a reason why they say history will always repeat itself, because people are forgetful. Now, what we're going to talk about next is Morgan Stanley. But before we talk about Morgan Stanley, let's go to the comment section first. This was happening there, and then we'll go straight into the next news. Let's see where we're at. If you care about men in women's bathroom, vote Republican. I mean, how can you disagree with that, honestly? Perfectly put. If you care about men in women's bathrooms, vote Republican, honestly. Also, did you see yesterday when essentially Caroline Leavitt held her first briefing of the New Year Kennedy Jr., and others said that they were going to back to basics with essentially food stalls away from ultra-processed foods? Yes, I did. No, actually, something popped up, but I didn't read it. But I remember. Hello, sir. How you doing? What's good, essentially? What's good about ADA? What's good about ADA? In my point of view, the day they decided to integrate essentially midnight with the XRP ledger. The more Cardano got closer, essentially, to the XRP ledger, the better it seemed in my eyes of it actually doing something useful. I absolutely applaud them. Essentially, let's go in. Good. Good afternoon, Miles. It's tea time here, at least for me. Let's go, country. How you doing? Facts, history always repeats itself. Let's go, Ray. Morgan Stanley is who we're going to talk about next. Morgan Stanley to launch digital asset wallets as a part of a product expansion. Now, we talked about Morgan Stanley last year, thinking about introducing other crypto services. And we talked about a hint of essentially Morgan Stanley wallet could possibly be on the way, or a Morgan Stanley trading platform, something that JP Morgan is also talking about as well. So here it is. Morgan Stanley has plans to launch a digital asset wallet in 2026 as the financial services giant continues expanding its crypto investment products and offerings to its clients. This is a massive, essentially, step forward. The wallet is built to support cryptocurrencies and real-world assets, including stocks, bonds, and real estate, with plans to support essentially more assets over time, according to Barron's. The company essentially announced that it would allow users of the E-Trade brokerage platform, which essentially it owns, to trade cryptocurrencies as well. Cointelegraph essentially reached out to Morgan Stanley for a comment at the time of this publication, but they did not respond. The announcement shows that the crypto essentially and blockchain technologies are gaining widespread essentially adoption from estimated essentially established financial institutions in the traditional financial world. Morgan Stanley announced several crypto-related developments for 2026, including essentially their ETFs. The company filed applications for the US SEC to essentially issue spot Bitcoin and sold essentially ETFs, which would be passive investment funds tracking the spot of price of these cryptocurrencies by holding them. Morgan Stanley also filed for essentially Ethereum staking ETF, and that would hold essentially spot ETH while staking on undisclosed portions of the funds in terms of to earn ETH for the clients. Staking is a process of pledging or locking up tokens to secure essentially proof of stake. Users who stake essentially tokens are paid in the token of blockchain. They are essentially securing, not essentially fiat currencies or stable coins. Morgan Stanley initially essentially offered crypto investments and products to wealthy clients with at least $1.5 million in investable assets. In October, the company essentially pivoted to allow all clients to invest in crypto products as well. The company began essentially recommending conservative crypto essentially allocations in October as well. Morgan Stanley's analysts recommended up to 4% allocation for essentially higher risk portfolios geared towards growth, and a 2% allocation for a balanced risk portfolio. So Morgan Stanley launching its own crypto wallet is a massive, bold move, I would have to say, definitely. It shows tremendous confidence towards the crypto space. I mean, honestly, the easiest way to put it, when you have a behemoth like Morgan Stanley coming out with a crypto wallet, just picture that even for a second. Because, for the longest time, we've been relying on essentially Trust Wallet, Tangent, and essentially other cold storages like Ledger and so on, which they're all brilliant in my eyes. But a behemoth like Morgan Stanley coming out and creating their own wallet, or essentially, using another wallet, pushing another wallet, or essentially buying up a company that owns a wallet, is an incredible step forward, I would have to say. Now, for the crypto space, in the eyes of other institutions as well, Europe is what we're going to talk about next on tonight's live. Before we talk about Europe, let's go into the comment section and then we go straight into the next news. Let's see where we are at. Miles, what's the significance of 9th of January for XRP with fire and cashback? Regarding the yield services, we're going to talk about a little bit later on tonight's live. Good evening, Miles and CMF. JP, good to see you. How you doing? How you been? Now, Europe. Europe's essentially DAC8 law integrates crypto into a formal tax system. When countries are essentially getting ready to connect essentially their taxing system to the crypto space, it's an indication of we're going from speculative to a mature market space where now tax is going to be involved. So this just shows us that Europe has just taken another massive step forward and getting ready for an institutional, governmental, essentially, sector of the crypto space. DC8 essentially is a new EU tax rule that started essentially on January 1st, 2026. It expands how cryptocurrency activities are reported to tax authorities across essentially the European Union. Its main goal is to tax transparency, and for the people who are living in the EU, this is a major turning point for them. DA essentially C8 actually forces automatic tax reporting. This means that crypto exchanges and brokers must collect your identity details, and they must report your tax identification number and must send full records of your crypto activity to tax authorities. This essentially includes buying or selling the crypto for cash and swapping one crypto for another. This is a big change inside a crypto firm. Even the withdrawals to personal wallets are now reportable if they start from an exchange. In other words, if you're again, this isn't just for the EU, I'll be very honest. This is something that's going to be applied in the UK, in Canada, in Australia, the United States, Latin America countries. In other words, G20 countries are all going to be on the same boat. So if you're somebody that uses crypto exchanges, the crypto exchanges this year and going forward essentially are going to be holding a record of everything you do. At the end of the year, they're going to be releasing it to your jurisdictions. Now, timeframes may change. Some jurisdictions might receive it much more earlier on. Some will receive it at the end of the year. Self-custody wallets are still legal, but if you withdraw from your exchange to your own wallet, then the withdrawal is reported and the EU wants visibility into where the funds go, but not to take control of the wallet. So if you do own a cold storage wallet, it still belongs to you, but if you transfer crypto from an exchange, for example, from Binance, Crypto.com, Coinbase, and so on, then the exchange will report that that is your personal wallet. And then from there, your governments will essentially ask you, what do you hold in your personal cold storage wallet? And then essentially you would have to do some self-reporting. So if you make a transfer from a crypto exchange to a cold storage wallet, the government knows that's your wallet, and essentially you would have to be reporting. Now, so this is about tracking essentially flows and not blocking the wallets, which means the government, is not going to be telling you not to buy crypto. They just want to know how much you have so they know how much to tax you. These are enforced by collecting the data in 2026, and the platform will send the first full-year reports to the EU tax authorities, and the government will receive and standardize the crypto data in 2027. The stronger enforcement comes later when the tax authorities compare data across countries. In other words, countries are going to be working together. In most cases, G20 countries are going to be working together, which means if you are somebody that's buying crypto, for example, in the UK, and then you start buying crypto in France, and then you start buying crypto in Sweden, you start buying crypto in Dubai, you start buying crypto essentially in America or Canada or Australia, you start moving about and buying crypto, all of those exchanges are going to be compiling your data in one PDF, for example, and handing it over to your government and saying you've been buying crypto in these countries. If the user refuses to provide a tax identification number, TIN in other words, then the platform can send a reminder. After 2 reminders or after 60 days, the account will be frozen or the transaction can be blocked until compliance. If you're somebody that's using a crypto exchange and you haven't declared your essential identification number, your tax number in the EU, as I said, essentially, as I read out, the exchange will send you 2 reminders. If you don't respond, they will freeze your crypto exchange accounts. Anonymous crypto is not possible in the EU because if you live in any of the EU's 27 countries, the anonymous crypto use via exchanges essentially is effectively over. The DAC8 puts crypto into the same reporting systems as banks. This will essentially be applicable for even non-essentially EU exchanges and must follow DAC8 if they essentially serve EU users. If they don't comply, then they will be banned from the EU markets. The EU estimates that DAC8 essentially could generate 1 to 2.4 billion euros per year in extra tax revenue and reduce tax evasion. So the EU is already looking out, essentially trying to make money from people who live in the EU. They're estimating the EU is going to be making 2.4 billion euros from just taxing the crypto space. Finally, the DAC8 is a part of the global shift, and governments worldwide have started to copy this model. This is why I say it's not just unique to the EU. They decided to copy this model to implement it essentially in their countries as well. Crypto transparency is becoming the global standard and is essentially officially treated like traditional finance. The more we get treated like traditional finance, the more these rules are going to be applying. But this is, the year of regulations, institutional money, taxation, and, moving away from retail to government money and institutional money in most cases. But yeah, if you want to know anything regarding taxation, that should answer your questions. If you use a crypto exchange, it's going to track your data if you use a crypto exchange and send it to your governments. And essentially, any transactions you make from a crypto exchange that is essentially compliant in your jurisdictions, not financial advice at all, they will essentially let the authorities know at the end of the year of, if this is your cold storage, so on and so on. Now, Brazil is what we're going to talk about next on tonight's live. But as you know, it's never doom or gloom. It's not always doom and gloom. Now, before we talk about Brazil, let's go inside the comment section first, and then we go straight into the next news. Let's see where we're at. Hi, Miles and CMF. Peg, good to see you. How you doing? How you been? This is such BS, as we haven't even made any money yet, and the idiots' governments are already after the taxes. Miles, if XLB does really hit big numbers, is serious thoughts of migration to tax-free countries. Yes, you can obviously, migrate to tax-free countries. It is your money, it is your life. There are many countries out there that are tax-free. Also, private banking is another option as well. Now, Switzerland, in other words, or Monaco, essentially, or Dubai, or Portugal for about 5 years. And there's a lot of countries out there. UK government could go and I'm not going to be reading what it says inside the comment section, but I understand the frustration from the crypto space, when it comes to taxes, because the governments did absolutely nothing but pester you for the longest time for being inside the crypto space. Governments tried to stop you from buying crypto, they stopped you from learning about crypto, and so on and so on, and they made your life hell inside the crypto space with not bringing out regulations, with not moving faster enough, and so on. And now for them to come around and decide to tax you on everything you had to go through, honestly, I do understand the frustration on that. But there are ways around everything. Now, Brazil is what we're going to talk about next on tonight's live. Brazil's high interest rates get tokenized with new stablecoins. The project, called essentially BRD, was essentially unveiled by Tony Vapulon, who is positioning the token less as a payments tool and more as a financial audit. The idea is simple in concept, but ambitious in scope. Allows investors outside Brazil to gain exposure to local government bond yields without entering the country's traditional financial system. Brazil is thinking about introducing essentially a very interesting play. If you're an investor outside the country, you could get in and essentially invest inside the country, obviously from the outside using blockchain technology. It's a great play, I think. At the core of BRD, essentially, is direct backing from Brazilian National Treasury securities. Instead of merely tracking the value of the Brazilian real, the stablecoin is designed to pass through the interest generated by sovereign debt to token holders. That feature essentially matters because Brazil's benchmark interest rate sits near 15%, one of the highest essentially among major economies. In contrast, US rates essentially remain several percentage points lower, leaving yield-hungry investors searching for alternatives. BRD is attempting to convert that gap into a digital product that can circulate globally. Rather than buying goods through local essentially brokers or navigating currency settlement rules, investors would hold a stablecoin that embeds those returns by design. Brazilian fixed income has historically been attractive but difficult to reach for foreign capital. Regulatory requirements and currency conversion costs on domestic market infrastructure have acted as neutral barriers, limiting participation even during periods of elevated rates. BRD structure is meant to remove much of that friction so that foreign investors can invest into Brazil much more easier using blockchain technology. By tokenizing exposure to government debt, the project reaffirms essentially Brazilian yields as blockchain accessible instruments, potentially opening the door for institutional and crypto native investors alike. Vapulon has framed the initiative as a way to modernize access rather than disrupt the bond market itself, suggesting essentially stablecoin could even reinforce demand for Brazilian sovereign debt over time. Brazil already has several real peg stablecoins in circulation. Transfer, essentially BRZ, dominates the segments by size, while other tokens such as BBRL, BRL1, and CELO, essentially based C-Real, focus primarily on settlements and payments and local liquidity. BRD is attempting to stand apart from emphasizing yield sharing as its defining feature. It also essentially, in that sense, it resembles a digital fixed income wrapper more than a conventional stablecoin. The idea is not unique, but momentum essentially is building, and Brazilian startup Crown recently raised significant funding for BRLV, another yield-bearing essentially real-backed token, while early circulation also remains limited. The emergence of multiple projects and points to growing interest in emerging stablecoins with sovereign essentially returns. BRD essentially launches highlights in a broader evolution in the stablecoin market. What began as crypto essentially substitutes for cash is increasingly essentially branching into structured financial products that mirrors bonds and money market funds and yield instruments. If successful, BRD could mark a shift in how emerging market yields are essentially assessed using blockchain rails instead of traditional banking channels. For Brazil, it represents a novel way to export into interest rate advantages. For investors, it offers exposure to one of the world's highest rate environments without stepping directly into the local markets. Whether BRD gains scale will depend on their trust, transparency, and regulatory clarity. This is something that could definitely be implemented into other jurisdictions as well. Jurisdictions that don't really get foreign investors due to some barriers that are in place, natural barriers that are in place. Other jurisdictions could take a page out of Brazil's book and maybe integrate blockchain technology into them so that foreign essentially investors can enter the market spaces at a much more easier rate, essentially at a much more faster rate. Now, moving on from what Brazil is introducing, which is, as they essentially said, it's very ambitious, definitely, to the US Senate. Now, before we talk about the US Senate, let's go to the comment section first. Let's see what's happening there. And then we go straight into the next news. Tax-free countries is okay, but you can't come back to the UK for 5 years. I would say longer. I'll be very honest. If anybody leaves the UK, I don't think they'll be coming back the next 5 years or 6 years. I mean, if anybody gets the Swiss passport, for example, I don't think they'll be coming back to the UK. But that is true, regarding 5 years. Hi, Miles CMF. How are you doing today? Carlos, good to see how you're doing. Adi, good to see you. How you're doing as well. But yeah, what Ian said is true. Now, US Senate restricts Trump's Venezuela military authority. As you may know, we've talked about this in the past few days regarding Venezuela and essentially the United States. And what I essentially said regarding what Trump did was a good thing because the Venezuelan president is an absolute dictator who essentially did horrendous things to his own people, alongside starving them and devaluing their currency, while he made millions and essentially opened up millions of businesses in his own essentially name, or acquiring millions of business from his own people. I mean, he did absolute horrendous things to his own people. So the man, being in prison, in my opinion, is not enough. But, they've arrested him. They're, taking him through the legal procedures. For what he did, prison is not enough, in my opinion. But here's what's interesting. The US Senate has voted to restrict former essentially President Trump's military action in Venezuela, spearheaded by Senator Tim Kaine, with bipartisan support in a significant legislative move. This vote highlights congressional checks on executive military power and directly affecting geopolitical risk and climates that could influence global markets, including cryptocurrencies, because it definitely can. The text of the Senate joint resolution provides detailed insights in these deliberations. President Trump's unconstitutional military actions against Venezuela risk dragging the United States into another endless war. Okay, regarding all of the Democrats that are saying release essentially, the dictator from Venezuela, every single one of them should be investigated. And if there are other, essentially, even if there are Republicans or essentially, liberals or whoever it may be, any politician who has come forward and said to Trump, release the dictator of Venezuela back to the Venezuelan people, should be investigated. 1 billion% they should be investigated, because that man or woman, politician, is being paid off. I could bet my left, essentially, lung on it. I'll bet both of my lungs on it, that whoever comes forward, any of these politicians that come forward, the majority of them are being paid off. They come out and say, release a dictator back to its own people. There will be a few politicians in there that are just brainwashed and they're doing it for free. But the majority are being paid off, while the rest are just brainwashed to come forward or pressured to come forward. But any politician coming forward right now, trying to get the dictator of Venezuela back into Venezuela so he can threaten his own people, should be looked into. Because what Trump did was the right thing. A lot of people need to understand this. The United States plays the role of number one, which means essentially it dictates what is right and what is wrong. Whether people want to agree on this, whether people want to disagree on this, essentially, no matter where you stand, that is the fact. The United States dictates what happens where and when. So people go like this or don't like this, it doesn't matter. That's why Trump keeps on coming out and essentially saying, I don't care what anybody else thinks. The United States dictates what is right and what is wrong, essentially, in that sense. So, them stepping into Venezuela, freeing the Venezuelan people essentially from a dictator, was a good thing. But for some oddly reason, Democrats are coming forward and saying that, no, we disagree with that. Trump should release the dictator back into Venezuela. Anybody, honestly, that's coming forward and suggesting this should be investigated heavily. Similar resolutions in the past aim to limit presidential military authorities as well. Reflecting ongoing debates about war powers, this event follows a pattern of congressional checks on executive military decisions. Look, this is why the United States has the veto vote. In other words, every country can vote on something to pass it or not to pass it, and America gets to veto it, and then it goes back to square one. So if America has the vote of veto anything they want, that means they have the loudest voice and the last voice, which means everybody can say what they want. It's whatever the US wants. So if you're in that position, that means that you get to dictate what happens to certain countries for the better. And this was for the better. If you want to have the loudest voice, if you want to have the veto vote, then that means you get to choose what happens next. You don't just get a veto vote over everybody and not do anything about it when the time comes. If you want a veto vote, that means you have to do things. Now, digital assets. To move from speculation to infrastructure in 2026, B. Riley says, digital assets are set to essentially cross a critical threshold in 2026, shifting from largely speculative instruments into practical financial infrastructure as regulations essentially matures and traditional institutions deploy blockchain technology at a scale. Investment bank B. Riley said essentially on the reports today. In 2026, we expect the digital essentially asset markets to transition from speculation to practical utility as regulatory frameworks are expected to mature. And blockchain integrates into global financial infrastructure, analyst Fedor essentially and Nick wrote. The analysts essentially argued that clearer rules around stablecoins, growing institutional tokenization of real-world assets, stronger governance essentially frameworks, and improving interoperability between bank ledgers and public blockchains are combining to change how digital assets are used, not just how they're essentially traded. This evolution is promoting digital assets treasury companies to pivot away from simply essentially accumulating tokens towards operational deployment that can generate recurring revenue, the analyst said. The group of 25 digital asset treasury essentially stocks that the bank and essentially the bank tracks continues to have enterprise value of about 0.8 essentially times the market value of their crypto holdings. The metric, essentially known as MNAV, is unchanged since mid-December, even as the underlying business model begins to look more likely, operating companies that are essentially passive investment vehicles. Enterprise value, essentially EV, is a firm's market capitalization plus debt essentially minimize any sort of cash. The analyst also flagged a recent decision by MSCI to reverse a proposal that would have excluded debt essentially codes from major global equity essentially indexes. And strategy, MSTR, the largest corporate essential holder of Bitcoin, has come under some sort of selling pressure as well in recent months, just so everybody knows on a side note. But regarding essentially these bankers that are coming forward and suggesting that 2026 is going to be the year of infrastructure, 100%. But they did also say as long as essentially the regulations are there, as long as essentially no more gray areas and institutions and everybody else plays ball. And when they say play ball, they're mostly talking about the Democratic Party. Now, moving on from that to World Liberty Financial bank charter license. So World Liberty Financial decided to essentially apply for a bank charter license the same way Ripple has, the same way essentially Paxos and Circle also have as well. World Liberty Financial applied for a US trust bank charter. The application did not draw much attention at the time, but it is at the center of how the project plans to grow. World Liberty Financial, often called as WLFI, is linked to Trump's family and closely tied to its stablecoin USD1. A bank charter changes how money is issued, stored, and redeemed for a stablecoin issuer. Those essentially mechanics shape, control, and long-term essentially scale. A trust bank operates under federal oversight and can hold assets directly on behalf of its users. This structure essentially removes several layers that normally sit between a crypto project and its reserves, something that essentially World Liberty Financial might be allegedly aiming for. Most stablecoins depend on outside companies to hold cash and manage custody. These partners essentially store reserves and handle redemptions and essentially earn part of the interest-generated government bonds. A trust bank charter allows these functions to sit inside essentially one entity. USD1 is backed by US Treasury bonds. Treasury bonds pay interest over time when the reserves are essentially held internally. That interest also stays within the same system. As the stablecoin supply grows, even modest yields add up. A charter essentially also simplifies redemption. Users no longer rely on third-party custodians to convert USD1 back into dollars. Issuance, custody, and settlement operate under one regulated structure. This setup gives World Liberty Financial tighter controls over dollar flows and balance sheet management. With bank charter essentially USD1, it combines two qualities that essentially rarely sit together: the value rates on US essentially government debt, while the token itself moves freely on networks as well. So US essentially the World Liberty Financial, the Trump family essentially crypto project, launching and essentially trying to get a bank charter license on the same level as Circle, Ripple, and Paxos. Let's see how that one plays out in the long run, because any sort of Trump crypto family businesses will do well as long as Trump is in power, as president. When Trump essentially leaves the presidency, when his term comes to an end, we would have to see how things play out in the long term for World Liberty Financial. World Liberty Financial only has fuel because Trump is president. The moment Trump leaves his presidency, obviously when it comes to its natural ending, then World Liberty Financial is going to be on shaky grounds, because the Democratic Party is going to be ripping through it as fast as they possibly can. So that is why you want to go towards projects that are much more neutral, that play both sides rather than just one. Now, on the topic is essentially of projects that are playing essentially both sides are playing neutral, but also here for a takeover. Ripple. News next to go on tonight's live. Ripple reveals yield strategies for stablecoin holders using RLUSD, which was a question regarding what I think Funky Brother was asking beforehand, if I'm not mistaken. It was relatable to yields and RLUSD. And I said a little bit later on we're going to be talking about that. I think so, yes. Before we talk about that, let's go to the comment section first. This was happening there. Okay, we were here. Tax-free countries. No, okay. Hi, Miles of CMF. How you doing today? I'm doing great, Carlos. Good to see how you doing. I think good to see how you doing. I have an email from Binance about UK self-assessment on 3101. I suspiciously look onto it. I would, Facts. Democrats never seem to surprise us at this point. I agree, 100%. Is ADA in your top 5? No. But it's a good project. It's a slow, boring project, but it has potential. Now, Ripple. Ripple reveals yield strategies for stablecoin holders using RLUSD. Ripple's Senior Vice President of Stablecoins, Jack McDonald, has outlined two key approaches for users essentially to earn yield from their stablecoin holdings. Speaking essentially on the company's Crypto in a Minute educational video series. If anybody has seen it, if you haven't, go and check it out. Ripple's essentially 1-minute video on stablecoins. McDonald explained how holders can turn essentially ideal assets into yield-generating tools by leveraging Ripple's ecosystem and broader DeFi platforms. In my opinion, it's going to be something that's, as I said last year as well, it's something that's going to be offered through Ripple themselves. In most cases, when Ripple does become an actual bank, they're going to be offering some sort of crypto services. About 2 years ago, I said eventually these tech companies will become. If anybody remembers, during TikTok days, I said that these crypto companies like Binance and so on will eventually become banks, the way they're operating essentially, which is what they're happening right now. Circle, Ripple, Paxos, and now World Liberty Financial. You're going to get a lot more tech companies trying to turn to banks. because they have the user base, they let you buy and sell, they let you invest. It's similar to a bank as how they operated day one. But anyways, putting that to one side, this involves placing funds into digital dollar reserves that support these stablecoins. However, this option remains limited to specific jurisdictions and is not widely essentially available due to regulatory constraints. Utilizing DeFi liquidity protocols, another approach by essentially shared by McDonald, includes allocating essentially stablecoins into decentralized finance protocols. Users can lock in their assets as collateral in lending platforms like Ava, or provide liquidity to automated market makers, according to Ripple. This on-chain method provides a more active way for users to derive financial returns using essentially stablecoins. While discussing alternative methods, McDonald also acknowledged that depositing essentially stablecoins into savings accounts is another option. Although it typically offers lower returns compared to DeFi and interest-bearing assets, this method also provides reduced yield potentials but may appeal to users seeking simplicity and lower risk. This is something that essentially JP Morgan is struggling to offer, or essentially Morgan Stanley, Barclays, HSBC Bank, the list goes on. These banks can't offer these services to essentially clients, but Ripple can with RLUSD and also with XRP down the road as well. Ripple essentially, they're already offering now through lending service and borrowing service for market makers, for example, but there's going to be a lot more services down the road as well. Ripple aims to expand stablecoin utility. The company is promoting these strategies as a part of a broader push to increase stablecoin utility across its ecosystem. According to Ripple's official communications, the emergence of yield engine signals a transition from simple, essentially digital dollar usage to more advanced on-chain financial tools. Separately, essentially, Ripple's managing director for Middle East and Africa, Reese Merrick, stated that XRP has now achieved and confirmed regulatory status as a non-security essential digital asset as well in the United States. Merrick attributed this development to prior court rulings and emphasized that the few digital assets have obtained such definitive classifications. Despite this regulatory milestone, Ripple's leadership stressed essentially the overall US regulatory framework for digital assets, and it remains underdeveloped. According to Merrick, the lack of updated regulations continues to restrict innovation in crypto businesses essentially operating in the country. So, one, Ripple essentially is trying to introduce, trying to tell people essentially in the world that you can use your US dollars and turn them into RLUSD, which is the equivalent, the same, and use that to earn yield on it. This is something that threatens the bankers. It threatens the banking organizations. It threatens the banks, that people can use their US dollars to earn yield on them. This is something the banks wanted to remove from the Genius Act, so that the average American couldn't earn anything on their stable coins because the banks can't give it to you. So why should the tech companies? Is how they saw it. It's just greed, absolute greed from the bankers. Another reason why, honestly, tech companies are just so much better than banks. Also, Ripple uses Amazon Bedrock to transform the XRP ledger operations. If you have heard it, if you haven't heard it, you're about to hear about it now. Ripple is implementing Amazon Bedrock to enhance monitoring, essentially, and management of XRP ledger network. The initiative aims to compress multi-day investigations into minutes. Engineers can now process systems logs faster, boosting network reliability and operational efficiency. The XRP ledger is decentralized layer 1 blockchain with over 900 nodes worldwide. Each node generates 30 to 50 gigabytes of essentially log data, creating a network of wide volume of 2 to 2.5 essentially petabytes. This data essentially complexity has historically essentially slowed issues and resolutions and limited real-time essentially insights. By integrating Amazon's Bedrock, Ripple can automatically link logs with the XRP ledger code and technical standards. The AI-driven system identifies operational anomalies and reduces manual interventions. Essentially, engineering teams can focus more on network upgrades and future developments rather than on other things. XRP logs are detailed essentially and generated in C++, making manual essentially inspections slow and challenging. Ripple engineers previously essentially needed 2 to 3 days to analyze node issues. With Amazon essentially Bedrock, the same process now completes within 2 to 3 minutes. The workflow begins with the XRP ledger logs essentially being uploaded to Amazon S3, Lambda functions and segments and log files, and Amazon's SQS distributes chunks of essentially for the parallel processing, CloudWatch indexes and entries to provide structured insights for anomaly detection. Like essentially linking logs with XRP ledger repositories ensures accurate essentially reasoning. Both core and server code essentially and protocol standards are automatically updated in the system. The integration helps AI accelerate essentially and explain anomalies and suggest targeted solutions. The XRP ledger's network's decentralized structure enhances security but complicates essentially real-time monitoring. Amazon Bedrock provides an imperative essentially layer to analyze patterns across distributed nodes. Engineers can gain a clear view of node health without manual log essentially praising. The solution allows Ripple to anticipate bottlenecks and optimize performance across the XRP ledger. Automated reasoning reduces delays in incident responses and streamline operations and workflows. It also strengthens the network's capacity to support complex smart contracts and higher transaction volumes. As the XRP ledger continues expanding, AI-driven log analysis positions the ledger for future upgrades, and Ripple's approach demonstrates how large-scale blockchain networks can maintain high reliability efficiently. That integration sets a precedent for faster data-driven operational intelligence on decentralized networks. Regarding Ripple and essentially Amazon, it's sort of confirmed regarding that matter. But if it is a full-on confirmed that Amazon essentially and Ripple and the XRP ledger are all working together and implementing AI into the XRP ledger, amazing. It just shows you another footstep that Ripple is taking to build that foundation. I mean, just G Treasury purchasing essentially an automated company, so that in terms of logs or paperwork in that sense being sorted out. Now in this sense also being sorted out, amazing, honestly. So one, Ripple essentially building a stronger foundation, trying to get AI involved inside the XRP ledger. So essentially, there's less usage of human intervention, more on the AI side. It speed things up. Two, essentially also regarding Ripple and their yield strategies, that the 1 minute video that Ripple released. Again, if you haven't seen it, go check it out on Ripple's own page, talking about essentially yields and custody services and lending and borrowing services. It's something that honestly threatens the banking sector. We have reached also the endings of tonight's live. That is incredible news, in my point of view, regarding Amazon and Ripple. Also, incredible news regarding, not incredible news, but bullish that Ripple is creating these types of videos, trying to let the American people, all the world, know that you're better off using RLUSD or XRP than US dollars. On that note, we have reached the endings of tonight's live. This was episode 428 of the CMF live show. The CMF stands for Crypto Mouse Family. My name is Miles. You can tune to this live Monday to Friday, 10 p.m. London time onwards, for the most recent news regarding, essentially for the most recent updates regarding cryptocurrencies, CBDCs, AI, politics, and regulations. Pretty much all the information you should know about regarding the world completely transforming into a digital space. The disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. See everybody tomorrow, same time as usual. Obviously, before we do go, let's go inside the comment section first, just in case. Let's see where we're at. Just in case anybody has any questions. Hi, Miles. The CMF. How are you doing today? I'm doing great. Carlos, how are you doing? Adding scary facts, guys. Okay, we're here actually. Which projects isn't slow and boring and good for full run? Just stick to the main ones, I would have to say. Woohoo! Amazon and XRP shopping time. Let's go, Peg. How you doing? Thanks, Miles. Good night. Peg, see you tomorrow same time as usual. Night, Miles and CMF. Pablo, see you tomorrow same time as usual as well. Thanks, Miles. Have a great night and see you tomorrow same time. Autistic, see you tomorrow same time as usual. Thanks, Miles. Stormy, see you tomorrow same time as usual. Great live as always. Take care, Miles and CMF. Ray, see you tomorrow same time as usual as well. Good night, all. Let's go, Stormy. See you tomorrow same time as usual as well. I will see everybody tomorrow same time as usual. Like, comment, retweet, subscribe, follow if you already haven't. If you have, thank you so much for essentially retweeting the live shows and liking the live shows as well. CMF members, if you haven't, like and retweet. If you watch us on YouTube, like as well if you haven't already. I'll be seeing everybody tomorrow, same time as usual. Good night, Miles and family. Great live many times. See you tomorrow. Let's go. Ian, see you tomorrow, same time as usual as well. Thanks, Miles. No problem. Shelly, see you tomorrow, same time as usual as well. I will be seeing everybody tomorrow, same time as usual. Everybody have a great day or a good night, depending on where you are around the world. So which coin do you recommend that is something that will be done in the bull run? XRP by a mile. Great live, Miles. Thank you and see you tomorrow. Mike, see you tomorrow, but same time as usual. Johnny, that's what I think, XRP. Good night, Miles and CMF. Thanks for great live. See you tomorrow. It's free forever. See you tomorrow, same time as usual as well. Thank you, Miles and CMF. Have a great night. Carlos, see you tomorrow, same time as usual. Good night, Miles. See you tomorrow night. Funky Brother, see you tomorrow, same time as usual as well. See everybody tomorrow, same time as usual. Everybody have a great day or a good night, depending on where you're around the world. See you tomorrow, same time as usual. Like, follow, retweet, comment, share, subscribe if you already haven't. If you have,